Good morning, good afternoon, good evening. You are watching the Paris Fintech Forum Communities video interview series. I'm Elliott Gotkine, and today I'm joined by the founder and CEO of German Insurtech, Wefox. Julian Teicke, great to have you with us.
Great to be on the show.
Okay, so before we get cracking, we're now going to learn a little bit more about Wefox. Okay, so first of all, tell us about the company. What exactly does Wefox do?
So Wefox was founded in 2015. It was around the hype of Insurtech. Literally thousands of companies have been founded back then. I think we took a different approach than most of them, and I think that's our strength today. So what we decided back then is that we're going to work with human agents instead of going direct. And today we are an insurance company that sells our own insurance products, but also third-party insurance products via our network of tech-enabled human beings. So we have 5,000 agents in our network across Europe. We're now more than 300 million in revenues. We have raised around 1 billion in VC funding, and we're valued at about 3 billion.
Right, and you're based in Germany. I think you're in Berlin right now, but you're in about half a dozen markets overall. Is that right?
Half a dozen markets, 6 markets, expanding fast.
And you mentioned the money that you've raised. I think it was $650 million was the last big round you raised in 2021. Gave you a valuation of something like $3 billion. What's the money for?
So we have a very profitable core business. Essentially, we have almost no CAC through the indirect distribution, and we have very low loss ratios through essentially cherry picking what is the risk we want on our own book. So we're growing fast, we're profitable, we need the money for expansion. So entering new markets is really where we spend the money.
And is that $650 million we saw in 2021, is that it for fundraising? If you're profitable already, you'll be able to self-finance, or should we expect another monster round from you?
I mean, it's all based on ambition. I mean, we're looking at the global market as our market potential. So right now we are only in 6 European markets, but we're talking about a $5.2 trillion industry, one of the largest non-digitized industries in the world. I think we've developed a secret sauce on how to get to a very, very strong market position very quickly in each new market that we enter. So from that perspective, we don't believe this is a European play. We believe it's a global play, and that the money that we invest into smart growth, low CAC, low loss ratio, more than 100% growth year on year. So essentially, there's lots of money to deploy for internationalization on a very healthy foundation.
And what's the mission here, Julian? Is it to become the next Allianz for the 21st century, if you like?
We have started this company in 2015 because we realized insurance, which is one of the biggest and most important industries in the world, still works like in the pre-internet era. So lots of paper, very cumbersome, complex process for customers, not customer-centric. So if we look at what we've done so far, which is build customer-centric products and tech enable our human agents and make the life of our human agent better because more productive, and the life of our customer better because more customer-centric consultation. And then all we've done so far is make insurance suck a little bit less. What we're here to do is really make insurance great. And great insurance for us means that technology essentially will have a huge impact on the core of insurance, which essentially means that not only paying when things have happened, but predicting before things will happen in order for you not to have the claim and for us to have a more profitable business. And we believe that that's the future of insurance, which is really customer-centric and profitable at the same time.
So make insurance great again. Okay, so we've heard about Wefox. Let's now get to know Julian a little better. Okay, Julian, you're in Berlin right now. I think, is this the city you grew up in?
I was born and raised in Berlin. There's very few founders that have been born and raised in Berlin. Most founders from Berlin actually grew up somewhere else, and we're a very rare species.
And what was it like when you were growing up? I think you were born just before Berlin was unified. I mean, how was family life? I think your father was actually in insurance, right?
My dad was in insurance, so I was born in '86, a few years before the fall of the Berlin Wall. Obviously, I don't remember the fall of the Berlin Wall. I do remember my dad telling me stories about he was an insurance broker, and basically he left West Germany, West Berlin, where we lived, every morning with an empty car, drove to East Germany and came back with a trunk load of new insurance contracts signed, because you have to imagine there was a time when an entire country did not have insurance. And
So
all
he
of a
was,
sudden,
yeah.
there was a huge market. Um, so that's the stories I hear from my dad. What was it like growing up in Berlin? I mean, it's been a very special place always, because Berlin was, that's what one of our mayors said, poor but sexy. So many creative people came to Berlin, and they did great things in Berlin. The problem was always when they wanted to start earning money, they left Berlin. So there was a huge cultural talent drain from Berlin. And that has changed over the last couple of years. With the startup scene in Berlin essentially becoming the strongest economic force of the whole city, it now more and more attracts global talent to come and stay in Berlin. And I think we have a great mixture now of really creative talent, but also successful companies, and people can stay here and not have to leave in order to earn money. So it's becoming much more sustainable.
Right, and you yourself, I think you went to a bilingual school, and then you also left Berlin to go to Switzerland for business school, and then you went from the land of chocolate to get your first start in business with a chocolate company. Is that right?
So I went to study in Switzerland, and that was just because I didn't know what to do with my life, and I figured, with business you can't go wrong, but I wasn't really sure whether that's the right track for me. When finishing university, I was thinking, do I become a businessman or do I become a cook? And I actually handed in my application with Jamie Oliver, and he never replied to me. So that's why I decided, okay, I'm going to jump into the startup world. And yeah, you're right. My first job in the startup world in Berlin was with a chocolate company, and it was my very first experience with, very new companies, lack of processes, lack of structure, but huge amount of possibilities. And that kind of got me addicted to work for fast-moving technology companies. So I really loved being in a startup.
And how did the idea of Wefox come about?
So in 2009, 10, I left the chocolate company and I went to Groupon to London. And the only reason was really my wife was in London studying. I wanted to be with her, my now wife, back then girlfriend. And I had a friend at Groupon, and he gave me an internship. So I worked at Groupon and I realized, wow, this is a rocket ship, right? And I also started really becoming self-confident. I was like, I can make a difference. I'm a good manager. I can motivate people. So I realized all of these things that I didn't realize in all of my 20 something years before my life. And I said, I can do this myself. So I started my first company. It was a Groupon clone in Switzerland called Dein Deal. We built it up until 2015. It became the fastest growing startup of all times in Switzerland, still one of the major e-commerce players in Switzerland. And in 2015, we decided we're going to sell the company. We're going to focus on other things. And then I still remember we were screening different options. And one day my co-founder comes in, co-founder back then, co-founder also of Wefox, Dario, and says we should really look at insurance. And I said, listen, my dad is in insurance, no option for me. I chose to go into fast moving consumer goods where I can reach many people and change their lives to the better very fast. And then he said, listen, I think it's time to really take it seriously. The digitalization trend in insurance is big. So why don't you give it a chance and talk to this one guy who made a lot of money with insurance, and talk to him. He's coming in on Friday. I said, yes, I will take 30 minutes. And then we were sitting with this guy, just brainstorming about technology and insurance. And after 15 minutes, he said, I'm in. And my co-founder is a great sales guy and said, you get 10% for 300,000. And then they shook hands and I was all confused and I was asking, what did you just do? So we had money, but no team and no idea. And then I had to start from scratch. And I called my dad and I said, Dad, you have to help me. And he brought me the great idea of focusing on agents rather than direct. He said, son, 9 out of 10 policies are sold via agents. 1 out of 10 policies direct. Everyone is focusing on direct. Why don't you focus on making the life of the agents easier and the consultation more customer centric with technology? And that was the start of Wefox.
Did you give your dad any equity?
Yes, in fact, he was the first country manager for Germany, and that's why he still has equity in the company.
And just briefly, you're quite outspoken online. You're fighting on many different fronts: diversity, data ownership, Europe, and also other issues like COVID and perhaps Ukraine and what was going on there, or what started there in February. Do you have any kind of political ambitions once you're done with fintech?
Absolutely not. So I think
Okay.
I think politicians, I have a great level of admiration for them, but I would never ever do their job.
Okay, well, that's good to know. A nice brief answer there. So, look, a key part of this interview is to get your take on the future of finance. But first, we are going to take a very quick break, after which we are going to continue our conversation with Wefox founder and CEO, Julian Teicke. Welcome back, and don't forget, if you're not already a full member of our community, everything you need to join can be found at www.parisfintechforum.com. And now, Julian, let's talk a bit about the future of finance. We mentioned earlier this monster C round you had valuing Wefox at $3 billion. Given the falls that we've seen in publicly traded fintechs and insurtechs, should we expect valuations in VC-backed fintechs to start coming down too?
I mean, we look at insurance, it's a $5.2 trillion dollar industry. In insurance, there's something I call the valley of death. So if you don't get very large, very fast, you're going to have a difficulty. So, of course, in the beginning, there's a hype, and then the valley of death. And if you survive the valley of death, you make it. And I think that's what's happening right now. So the companies that are not moving fast enough, that are not growing fast enough, they will never become significant enough, because essentially with technology, you can only make a real difference on the unit economics, on the underlying metrics, if you're big enough, right? So insurance is a game of big numbers. And if you want to have better loss ratios than the incumbents, it only works with bigger numbers. If you want to have lower admin costs than the incumbents, it only works with better numbers. If you want bigger numbers, if you want to have better sales ratios, it only works with bigger numbers. So you have to have a critical size in order to be able to compete. There's a few that are going to make it, and these ones will be the serious challengers to Allianz, to AXA, and all of the other global companies, and they will have a huge advantage compared to the large ones, which means no legacy technology. Building everything on a single tech stack and really lowering the admin costs, the loss ratios, and the sales costs in a sustainable manner will make the risk business interesting again and much more sustainable than it is even with the large insurers.
And speaking of size, often when companies, fintechs or otherwise, get to a certain size, they start looking at the possibility of an IPO, an initial public offering. We've seen insurtechs like Hippo, for example, have their stock see their stock price tumble since going public. Does what's been happening, and also Lemonade as well, does this make an IPO for Wefox less likely?
What we really focus on is ourselves and our delivery. So our target this year is to grow our business again by more than 100%. We're aiming to cross the 1 billion US dollar mark in terms of revenues, and that's 7 years after founding. So we have enough to do with ourselves. We focus on growth at low CAC and very good loss ratios. I think we have a unique model that shows much better profitability. And by delivering results, it's very easy to finance the company, right? So that's why that's our chosen path.
Right. And we recently saw in your space, we saw Trove being bought by Travelers. Many insurtechs like Lemonade and Roots are posting widening losses. Does this reinforce the sense that succeeding in insurtech is not easy, it's very hard, and that more M&A perhaps is on the way for those that are not perhaps as strong as Wefox?
No one ever said it was easy. If it was easy, it would have been done before. It's the last industry to be digitized. I think we have a very strong proposition because we can grow very fast organically, and we don't have the problem of the huge CAC. So if you go direct, right, you have to pay a huge CAC upfront, which gets you into the money after only a while. So you need a lot of investment. So we don't have that because we go indirect. The second topic is we have the very strong setup of being able to cherry pick. If a risk comes in, we can decide, are we going to take it on our own balance sheet because we know we're going to beat market, or are we going to put it on someone else's balance sheet? And with this, we can grow very fast. Again, we're growing to $1 billion this year, and we can have better than market loss ratios. I think that's the secret formula. I think many people understand this. Many people start copying us. Many people start hiring agents, right? A topic that was a no-no when we started. People laughed at us when we started and explained our strategy. They said it's so old school. I think now everyone is looking up to us as the role model for how to disrupt insurance on a global scale.
Okay, but yeah, I suppose Wefox's situation would suggest that it is possible with the right strategy to build a profitable B2C insurance business within a few years. But for much of the market, do you expect to see like a series of mergers between incumbents and new players before the dust settles, let's say?
Well, if we look at the future, I mean, that has always happened. So certain consolidation, that's part of the game, right? Essentially, I do believe that in the last few years, many insurance tech companies have developed amazing technology. And that technology can help the winners become even stronger. So I do believe that many of these technology companies that don't have a viable business model, they will find a new home with whoever is the winner of this new insurance revolution. And we are actively looking for technologies. We have already made a couple of great acquisitions to support our growth and to further support our global expansion.
Before we saw in February Russia invading Ukraine, investors seem most concerned with rising inflation and interest rates because this tends to kind of reduce the value of future profits for fast-growing startups like Wefox. Although, of course, you're saying you're profitable now, so perhaps we're not looking at profits so far into the future for you. But is that something that worries you? Rising inflation, rising interest rates?
I mean, for an insurance company, it's not necessarily a bad thing. I think the last 20 years with a low interest environment have been tough for many insurance companies because capital returns have gone down to zero. And all of a sudden, the risk returns had to be in the focus. I think a huge focus for us, or advantage for us is that we were founded as an insurance company in a zero interest environment, which means we had to focus on having a big risk margin through technology. And we've never been in a time where money just comes through the window through capital returns because it wasn't there. So now, if interest rates increase, it's in fact good for us on top of our focus on risk margin that is very high. I have nothing to worry about this.
Okay, so look, I've got to get to now because it's time for our round of rapid fire questions and we're running out of time. So are you ready?
Yes.
Okay, so very quick answers if we can. From your perspective, what fintech segments besides yours has the biggest potential over the next 5 years?
I think DeFi.
Okay. What's the biggest pain point in your everyday financial life that you would like to see taken on or changed?
It's really figuring out what to invest in and having that in a very easy and simple way.
Are we at the beginning, middle, or end of the fintech wave?
Wow, we're just at the very beginning. I mean, look at the market cap with the incumbents and the market cap with the young guys. There's much more to come.
Do you have a metaverse strategy?
So I have a lot of opinion about the metaverse. I think it's going to
We
be a
haven't got
good
time
thing.
for the opinion. Yes or no? Metaverse strategy?
No.
Okay. Do you think EU and US regulations today have adapted enough to handle the new possibilities and behaviors we're seeing in the financial industry?
Absolutely not. They're lagging behind.
How would you describe NFTs? A scam, B, an interesting concept, or C, part of our future that you mustn't miss out on?
Part of our future you mustn't miss out.
Have you ever invested in crypto?
Yes, not large amounts.
Okay, one famous member of the PayPal mafia is changing the car industry and he's hell-bent on sending us to Mars in case everything goes wrong on Earth. Do you have any out-of-this-world ambitions to become the next Elon Musk? Europe's Elon Musk, maybe?
I think my major goal is just to become a satisfied and happy family father.
Okay, and on a scale of 1 to 10, 1 being the lowest, 10 being the highest, how would you rate the chances that in the next 10 years, one of the neobanks will be as profitable as a top-tier legacy bank?
10.
CBDCs become a mainstream reality in the US or EU and not just in China?
7.
You'll be able to open a crypto account at a top-tier bank in parallel or even instead of a classic fiat account.
9.
Swift will still be the main tool used for transferring money around the world.
3.
A new rival will emerge to challenge Visa, MasterCard, UnionPay or Amex, whether it's a card or not a card.
9.
And finally, that we will see a top-tier bank or insurer bought by a fintech.
I mean, that's going to be us, right? So 10.
Okay, well, I'm afraid that is all we have time for. So huge thank you to you, Wefox founder and CEO, Julian Teicke, for joining me today.
Thanks, Elliott.
Thanks for playing along with all of our little questions there. So look, we're going to be back again next week with another big name from the world of finance and technology. We do hope you'll all be able to join us again then. In the meantime, don't forget to subscribe to the Paris Fintech Forum YouTube channel and to follow us on Twitter at Paris Fin Forum. Hope to see you next time. Take care. Bye-bye.